Coming up with something every day to talk about these markets is a soap opera. And you guys remember Days of Our Lives, right? Nah, some of you do, some of you don't. You have to think I'm crazy. But these are the days of our market lives. Unfortunately, some are not doing so well. We've been talking about them for a long time, and the soap opera doesn't look like it's going to end in software anytime soon. We got some earnings to talk about, not much going on in ratings land. But folks, we got a busy day here. Paul Dietrich, Wedbush, Chief Market Strategist, joining us at 8:35. Let's get it started on, let's just call it Wild Wednesday. Let's get it started.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. This is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
All right, good morning, traders and investors. Starting out in a little green after a rocky day yesterday. We're up about 11 handles at 69.52.75, just hanging out mid-range on the session. The buck, what's the buck doing here? Well, we got a little bit of a winning streak. Let's see if we stall at 97.50, up about a nickel. TLT flat, 86.75. USO down 65 cents, 76.81. GLD and SLV, they're not giving up yet. They're up. They're both up smartly here. Prince just going off right and left. Let's just call it 872 in the GLD. 463.01. SLV back over 80. We got to get half of this move back. Bitcoin futures down $420, 76,285. Working on an inside day after that big range yesterday. These charts are brought to you by TradeStation, born to trade. Chart, analyze, customize, all-in-one platform. Learn more about the TradeStation platform. Let's bring Triple D on here. And I love-hate relationship, soap operas. I mean, Dennis, could this market get any crazier?
I don't think the market is that crazy, but there is just certain stocks that are getting hammered. So like when you look at the markets, you're like, oh, it's been kind of, just steady as she goes. We're holding on pretty well. Some of the stocks in your portfolio doing pretty good. Some of the value names continue to climb. But there's just pockets of destruction everywhere, and especially in software. And yesterday, it expanded into so many software names that I was like, is this just an overshoot at this point in time? I mean, Brentster, you come into this conversation because we were talking about this in the Stock Trader Network room, the think tank last night, for a long conversation. But I mean, we're getting to a point where you're saying, is the media waking up to this? Because it is now what? The front page of what today?
The WSJ. I'm going to pull it up right now so we can pick on them a little bit.
Like this software sell-off has been going on for, a good couple of weeks here now. But, now everybody's starting to catch up to it. We'll go to the WSJ here.
Software jitters, unnerved global investors. Folks, it is February 4th. We've been talking about this for more than a month at least.
It feels like it's been about a month. We've been talking about this for a month, but they're starting to catch on to it here too. I mean, it's spreading, like I talked about the top possibility of it spreading into gaming, cybersecurity. I never talked about the possibility of it spreading into stocks like Expedia and Booking, but it did yesterday. It spread to areas that I think like now you were getting a little bit, maybe to the point of like, okay, is it really ending everything? Because you got Booking losing, I don't know, 10% yesterday.
Maybe more.
Expedia losing 15%. At first, I'm like, what's the news? And I'm like, oh, this isn't news. This is simply just software. They don't want to own Expedia either because they're figuring, hey, Gemini, make me a trip, like build, go and look around, find me the best value. And if I'm going to go to Jamaica, find me the best hotel, best value, spit it back at me and book it for me. It could do
Yeah,
that.
that can do that in
It
a second.
probably could do that. Probably is
Yeah.
almost there. I don't know if it can do the.
Wait, what do you mean
booking
it
yet, but
is there? I
probably
mean,
taking a site.
Lisa's been doing this.
It
I
is
mean,
there,
for
yeah.
months.
Well, why didn't you tell us this 2 days ago, Joel, when Expedia and Booking were sitting near their highs? These stocks, so the market is obviously slower catching on to these themes, but even spreading farther, look at the financials, like look at FICO. Fair Isaac uses software. EFX uses software, like it's software is what it is. Not uses software, it is software. Tree, Lending Tree, hammered yesterday. And then you were talking about the legal, like LegalZoom.
LZ.
Then we don't need that anymore,
Even
because
Z-
AI is going to replace that.
Even
IT,
ZM.
Gartner. We don't need
Yep,
that
Gartner.
anymore.
Yep.
I mean, you can just keep
FactSet.
going.
FDS.
FDS. There's just this list goes on and on of the stocks that have been absolutely hammered. So it is right for the Wall Street Journal to be putting this on the front page, because this is like what is happening in the markets. So I tweeted out last night. Last year, we were in the first inning of AI, where AI is awesome. Look at the stuff it can do for me. Look how it's going to help my life. Look, at ChatGPT. Look, it can write a resume for me. It can, have a conversation for me. It can do stock research for me. This is such a powerful tool. And all the AI stocks and all tech stocks just flying and flying. And the tech stocks were just roaring. AI for everyone. And the tech's going to be worth so much money. Just buy tech. Well, we've entered inning 2. We're now in inning 2 of AI. Inning 2 is AI is awesome. Look at all this stuff it could do for us. Holy cow, this is just so amazing. Look, it can even replace certain of software that I'm using. Whoa. What do you mean replace certain software you're using? What do you mean? This is not, what's that mean?
Software.
What that means is software stocks are dead. At least they are right now. Is it an overshoot? Is it, I don't know. But now we're getting separation where we need chips, we need memory, we need all this. Those stocks all fly. Software dies. That's where we are in inning 2. What's inning 3? Because we're going to say AI is awesome. Look at all the cool stuff it's doing for me. What's next? That's the question. So we're in inning 2, but we're going to enter inning 3. What is next? And I don't want to talk about inning 9, because I'm somewhat concerned about inning 9 because I've seen the Terminator movie. So we'll leave inning 9 for now. But what's in between inning 3 and inning 9? That's what we're trying to find out. But I'm telling you, every single day something else gets, hurt here. This is incredible to watch, and especially since the S&P says, nah, we don't need to sell off these names because we've got value. We've got Warren. No, we don't have Warren anymore. Oh, no. Well, we'll buy Berkshire Hathaway anyways. We've got, banks, like regional banks. Those are, real economy stocks. We've got some retailers that are coming back. We got the airlines and the cruise lines, and people still got to do stuff, and that's okay. So value does equal sexy right now. This has been the year of value so far, and it continues.
Dennis, we did this in the SCN room the other day. We considered how many software names are in, was it the Qs? Or was it, do you remember what index we looked at?
Yeah, so I went to Gemini, of course, because, and I just asked it. I said, give me all the stocks that, have software businesses. Of the 500, 353. I'm like, oh, crap. Because it's giving me every stock that has any bit of software that it's selling. 350. But then I'm like, okay, narrow it down to more software companies.
Is their business.
Software. It got down to 63. And then I said, nail it down to the companies that are most exposed in software. It gave me 28 names. We looked that day. I tweeted out those names, and every single one of them was down except App11. And then App11 got killed the next day. So that's, the power of the research tool, which is really good. But you can see they are just now across the board selling all software. That's scary.
And I think we gotta ask, what's next? What hasn't come and been hit yet? Because we can see, we saw yesterday in these travel names, you can see traders and investors going around and slamming these things. Like you can physically
and
see
thinking of something else.
So what's next? This is what we were considering in SCN last night, and we had a couple ideas, but these stocks have been absolutely crushed. Like most of these stocks have been absolutely crushed. So we're a little uncertain what might be next in software. Chat, we're always open to hear some of your thoughts. But so Dennis, you had this aspect here where you're like, okay, I'm potentially looking at some short software ideas, but also
well, it's kind of late for that.
It's kind of late for that. Yeah, that's a good
So
point.
here's a good conversation before we go to value.
Yeah.
You know, when we are now in the whole world, and it's on the front page of Wall Street Journal, the whole world is talking about
there
the
you
software.
go. Yep.
We are so massively oversold. Bring up the IGV, Joel. It's probably the best thing to look at here. I mean, 2 weeks ago, we were 105 and fine, $85. We have essentially crashed here in the last, 2 weeks in software. So at this point in time, it's probably a little bit of like baby with the bathwater. What is, getting to a point of ridiculousness here? Like, are we, overshooting? I think, there is an opportunity there where some of these stocks are not absolutely going to zero in the next week or next month. So I do think we've overshot just a little bit. But what I can tell you, and your segue in, so if you've got some names you think, are being, not justifiably punished here, let us know. We want to hear about those. But also, what is happening is rotation. Why does the S&P not show any of this carnage? Why are the Qs holding up so well? I mean, even yesterday, we started losing NVIDIA. We lost AMD, which we'll get to in a second. But I mean, they're holding up fairly well. Well, why? Because everything else that is not to do with tech is actually doing pretty darn good. Like, you got healthcare. The XLV got crushed off Humana UNH, but holding up fairly well. XBI, Newton, right there, right under 52-week highs. IBB, right under 52-week highs. Healthcare is fine. You go into the Staples. Staples was blasting off because they love this. Everybody, like literally Kramer last night was saying his AI stocks are Procter & Gamble and Mondelez. I'm like, okay, this is where we are starting to get, like this is maybe getting long in the tooth, but just saying they're going to use AI to be more efficient and they have no exposure to any of their businesses where they're selling stuff. True. Procter & Gamble, you're going to buy Procter & Gamble stuff no matter what. You need their stuff. So Mondelez, do you need their stuff? Yeah, especially if times get tough for certain people. Makes sense. Now Mondelez is down in their earnings. But, this is what 2 stocks that he picked last night as the AI stocks. I'm like, okay, we're in a whole separate conversation here up there. But it is a good point that non-AI stocks are the ones that are doing the best right now. Chips, we know. Chips have really been flying and they've been holding up well. But eventually, I think that's like overdone here. But they have been gravitating in the last few weeks to like real economy stocks. We know the airlines have been flying higher. You can quickly look at a UAL, AAL, flying higher in the last week or two. Delta doing well, flying high in the last couple of weeks or couple days at least. So rotation. That's the life. That's how bull markets stay alive. And that's what's keeping this bull market alive overall. It's what's keeping the S&P elevated. So does that continue? I mean, stay tuned because, who knows how all this turns out.
That was a rant.
That
was a good one, man. I was like, I'm speechless. He left me speechless.
Like less of like that was like a pretty controlled rant, Triple D.
I know. It was a nice rant. So I like, again, we see certain stocks and maybe we start with, AMD from last night. So let's just go and do some earnings here because we want to get the earnings in. And there's a lot of companies that are reporting. We're still in the heart of earnings season here. Absolutely. And the bar was really, really high for AMD. Why? Because a lot of tech stocks have been selling off, mostly software. Chip names been holding up. You said this quarter was pretty darn good, Brentster. Give us the numbers. Give us the guide, which seemed to be fine, but doesn't matter because the bar is high. And you know what? This market is just lukewarm to tech overall right now.
When it's one of the most hotly anticipated earnings reports of the earnings season, do you want fine guidance? No. Maybe a fine quarter and strong guidance. AMD quarter was really strong. Earnings $1.53 versus $1.32. Sales a nice beat, about 10.3 billion versus about 9.7 billion. But here's the guidance: they're looking for Q1 sales 9.5 to 10.1 billion, and the analysts are around 9.4 billion. So the guidance was like almost toward the range of the analysts. And we saw with like SanDisk, absolutely blowout. Like that's what you want to report if you're an AMD. That's not what happened.
Yeah,
and we also saw we also saw what happened with SanDisk too. So
yeah, well, that's just it. And that's what we were saying with tech. When you have SanDisk, which we called and said This was maybe one of the best quarters that we have ever seen in all stocks since covering stocks in the last 27 years. I've been doing this. As an incredible quarter. It gave it back that day. Teradyne, same thing. Like Joel, you had a fantastic call on the stock yesterday. This quarter was phenomenal. It gave it all back in the morning. You actually said if it comes back in that 250 range, it's probably be a buy.
Never thought it would.
For like a heartbeat, like literally right off the hop when the algos were just like thin and they didn't know what to do. They hammered it down off the open and then they just ripped it higher. Real institutional money came in and said, no, this is where we want to be. We want to be in hardware. We want to be, safe because it's been software versus hardware. AMD, NVIDIA, Teradyne, Micron, SanDisk, you're really talking hardware versus software at this point in time. So hardware has been very good. The question is, does it eventually start to be long in the tooth? Does it eventually roll over? Because these stocks have held us up as well. As much as value has held up the S&P, hardware has held up tech. We kind of lost NVIDIA last night. We did lose, or yesterday, we did lose AMD here overnight with the high bar, and AMD is trading down 10%. I haven't sold any of my AMD. I still think it's going to be a big part of AI, but we're just long in the tooth. We've had pretty good runs here. And there's, people who literally just don't want to own tech stocks right now. So that's, I think, a little bit of why it's the selling off. Does that mean it continues the sell-off pressure? That's hard to say. But Joel, talk to me about.
Well, they were loving this thing on the way up, right? You had that bounce off 200. You went double top, I believe, an all-time high there. Then you came down. It's just sitting here. It's just sitting here at I mean, they're like the Bulls and the Bears are just kind of like looking at, do I love it? Do I hate it? Do I love it? Do I hate it? And they're just sitting here at 219.30. I will say that you do have a pair of lows to lean on here if you're sticking your neck out at this area. Pair of lows, 215 right here, right before the big run up. However, if you lose 215, you can look for a gap fill. Coming back on the upside here, you got a long ways to go to get to the bottom of yesterday's range. This is a tough chart here. We are really in the middle of nowhere, but the fact we got two lows at 215, I can give it a 2-star here, but it just they're just not, there's no bounce right now. No bounce at all. So we'll see what the Bears can do.
And we have not, as much as we can say, buy the dip, the best eternal strategy of all time. Not in the last few weeks. Buy the dip has not been working in so many names. If you're initially buying the Microsoft dip, if you were initially buying, the plethora of software names dips, you've got punished for that. It has not paid to sit and say, hey, I'm going to catch the falling knife because I know it's bouncing right back. We are not seeing that. In contrast, what we are seeing is pretty much every rip getting sold now. Like we're seeing on the earnings plays. When you look at Microsoft and look at Meta when they reported. Microsoft gaps down 10%, Meta gaps up 10%, or whatever it ended up being. Meta has quietly given it all back. Microsoft not gaining it back, but continues to leak. So you can see when you're getting these blind rips right now, the market is interested in raising cash, which brings us to Take Two from last night here as well, because when Take Two, before it reported, I said last night, I'm like, I think you want to be shorting the rip on this, not selling it, just even shorting it. And this was in the S10 room. And the stock went 216, 218, 220, up to 227, and then kind of just starts to flutter out. And it's a fantastic quarter, but you've got a stock that's just massive overhead supply now. You have a stock that people are actually worried that, they're going to be under attack from AI. And you get a nice rally because the algos are too stupid to incorporate any of that. They just say beat, raise, and they buy. We'll take advantage of that, because obviously if your long Take Two was 226 last night, it's now down to 216. It would not surprise me if it actually goes red on a pretty darn good quarter because they hate this sector. They hate all software right now. It says it right in the name, Take Two Interactive Software. So they hate that right now. Is it warranted? Is it overdone? Are we going to be upset that we don't buy this and put it in a long-term portfolio 5 years from now? Nobody has the answer to that question. But what we can tell you in the short term is these stocks are massively out of favor. What do you do when your stock is massively out of favor? You sell rips. That was Take Two last night.
Wait, I mean, they did sell that. I mean, they took this thing under 208 here. Where did we take it to? The pre-market low. Wow.
No, it's already been read today.
No.
I don't think so.
No. That was yesterday.
No, it was 208. They ran it to 226 last night, and now it's leaking.
Right.
That's why I've argued that. I even said it last night. I said I would not be surprised if the stock goes red.
I was looking at the action from yesterday. I mean, I'm just looking at these are so intimidating candles here. 1, 2. Oh, it can't get much worse. 3. Oh my gosh. 4.
It's getting worse.
It's getting worse.
5. I mean, that is just destruction here in a stock that is pretty tame, right? Look at some of these ranges and everything. I just think there's the thing about buying the dip now with these kind of declines. There's just so much overhead supply. It's just accumulating on a daily basis.
Yeah.
And then you flip the switch and you're saying, "Oh, that's just the worst looking chart ever." But then you're like, "Well, man, I bought this thing at $100 a while ago. Heck, I'm good." But when you start getting these days,
people are now saying like, "Crap, I better ring the register." I saw a gentleman yesterday saying, "Well, I sold my Robinhood. I sold, there's a couple other ones in there like Apple Oven because I bought these things 3-4 years ago and I'm booking the gains." And I'm like, okay. I think Robinhood was $150 2 months ago. You're selling it at 87. You're still feeling pretty good. So that is a little bit of it. It's still like people are saying, "Give me the last of my profits because I don't want it to go away." I mean, that's panic selling to a certain extent here. I mean, Robinhood goes down every day now. Which maybe brings us into, our Bitcoin conversation, which we can talk about here too, because this is now starting to seem like wanting to go down every day now. So you come in just another day and Bitcoin's lower. You come in just another day and Ethereum's down another 3%. I mean, and here's Robinhood, which is the darling of darlings, the best of breed. The stock and the company has done so many things right. Man, we were $140 6 weeks ago. The stock's $85. I mean, is this throwing the baby out with the bathwater? Is this a stock you want to buy? I'm asking you, chat. I'm not recommending. We don't do stock recommendations here. Maybe you want to talk to us a little bit about Hive here as well, here, Brentster, as we go into this conversation.
Of course, want to say thanks to our wonderful sponsor, Hive Digital Technologies, pioneering the digital transformation through AI solutions and Bitcoin mining. Hive Digital builds and operates next-gen Tier 1 and Tier 3 data centers powered by clean energy across Canada, Sweden, Paraguay. Company's dual engine infrastructure driven by Tier 1 computing services and GPU-based accelerate API computing delivers scalable, environmentally responsible solutions for the digital economy. There is a QR code in the bottom right corner. It'll take you over to HiveDigitalTechnologies.com. That's what I'm looking at right now. You can learn more about Hive. Thanks again to Hive for sponsoring Pre-Market Prep.
So yeah,
bad day yesterday.
I mean, Bitcoin, it's struggling here, and obviously they're calling it digital gold, but it ends up being gold is what they like. I mean, the silver dip, which we talked about buying and we bought multiple times here now in the STN room for overnight trades, is been working. That's what's been working really well the last few days. So you get the 30% sell-off. People still are nervous about this. It's not surprising to me that silver is trying to come back. I mean, some of the minerals, some of these stories are still real and not going away. I would like to go back to Robinhood, though, for a second and get your technicals here, Joel, because this is a stock that's highly traded, very well followed in the retail community. You don't get a lot of 45% off sales here on this stock here. This is a pretty big one here. Is this something you would look at? I mean, I can go give you some fundies, and it's still expensive on a PE basis, which is another thing to talk about, because low PE is cool, high PE is not. You're seeing those stocks, get hit here. But what are your thoughts technically?
I mean, people don't want to hear this, but doesn't that look like a head and shoulders top there on the weekly?
Crap.
A little bit, yeah.
Maybe the gentleman who was selling it yesterday.
Yeah.
Is, right to be selling it in the hole.
And look at this march that it had from 40 to 100. I mean, this is just on a weekly basis in early 2025. Unfortunately, what we learned from these markets is that something that can go up in, let's say, 4 weeks, 2 months, 3 months, 4 months, it can be gone in 60 seconds. It can be gone in a day. I don't.
This is
I
what
just
the
don't know
crappy thing
where
about
you
bear
step
markets
in.
is.
I don't know where you step in here on something like this.
Escalator up, elevator down.
Really hard. I mean, we work hard. You know, think about those software names that have been working, you know, for years to get up there, and they give back, you know, 7 years of gains in a few weeks in some cases, you know, like, or a few months. It's crazy. It's 33 times earnings. It's not, that's actually as cheap as Robinhood has been in a while because they're killing it, they're crushing it, they're doing a lot of things right. The one concern is as you continue to get carnage, and I will tell you, is that in Robinhood, they are almost all long traders. So the traders inside of Robinhood are starting to get beat up because they're in a lot of these, you know, Palantirs, they're in a lot of these, you know, names, they're very tech heavy. They're, you know, so the clientele in there, assets are probably as a whole going down in there. And that's a concern too. Now, does that mean it can't all turn around? Does that mean all this can't turn around? Maybe we can move on without software. Maybe software turns around. So I wouldn't say it's over here, but I would say, like, you know, we are definitely oversold here. Could we have a technical bounce? I think so. But to Joel's point, the overhead supply here is real. Imagine getting back to 100. You've got a wall of sellers at 100. So really you got to look, okay, if I'm buying 86, it's going to have a real hard time going over 100. So I'm really looking at, you know, the potential for, like, you know, 10-point gain here. That sounds pretty good. But when you're seeing the stock fall 10, 20, 30 points, you're like, risk reward, is it really in here for me to jump in right now? I don't know. If you're a long-term investor and you wanted to nibble in, you think this too shall pass, Robinhood is the best of breed and a great company. So by good companies at reasonable valuations, a PE under 30 for Robinhood is very reasonable. So I would think, like, once you start getting under 80 here, you're starting to get into a buy.
Is it
if you're not there already.
Jack B. Nimble says Hood is just software.
It's
okay.
If you want to
go here,
and it brings up a good point. Here we go.
If you want to go here,
you did, Jack.
You basically can sell everything because everything is software, and that's a great point. Is Gemini going to create a brokerage account? Is Gemini going to create a social media, you know, account where Gemini is going to, we don't need Meta anymore? Because all Meta is software. It's just software that brings people together. So if we start going into that, that's where I don't even know. I don't think it's going to go there because, one, you've got to have the connections. I mean, I even made the argument with Uber last night. You know, could Uber, you know, here, and Uber's bouncing back, but they've got all the connections already there. They have all the information of all their drivers and people who have subscribed. That's worth money. Information is worth money. So I don't think we're going there. I don't think we're going to a point where Robinhood, with all their clients, you know, like, they have all that information. I mean, Gemini doesn't have those people signed up and have their information. Let's do a brokerage. I don't think it's that simple. If it becomes that simple, there's a lot more companies that have a lot of problems.
Are exchanges gonna, like, hook into everyone's Gemini? Not in the near term, you know.
I don't think so. No.
Yeah, exactly. The connections, Dennis.
I think so. So I think when you've got companies that have massive information and, you know, all this, you know, social media companies that have all the connections and people are using it, you know, to connect, like, you know, your TikToks and your Metas and your Instagrams and all that. I feel like those are safe for now, and I really put for now because I don't know where AI is going, and nobody does. Do they hit that stuff in the third inning? I don't know. Do we have a third inning relief? Like, you know, like, we, you know, like, stock market was up, you know, 4-0 in the first. It was going great here, and now they've come and, you know, and they had a grand slam, you know, against software stocks in the bottom of the second, and it's 4-4. Like, this is like, is AI good or bad? It's like tied right now because we're starting
to pitchers.
It may actually be bad for a lot of companies.
But what final comment on this Robinhood? And do you guys remember when the talk of the town was DraftKings in Penn? And I told you guys that people are going to run out of money. I kept on telling you
and
that.
You're wrong. And you're wrong on that. People haven't run out of money. Robinhood came and pissed in their pool.
Okay.
So Robinhood came.
Robinhood is now
and
advertising.
Other companies, prediction markets.
This is what worries me about Robinhood. Okay. I heard advertisements on the radio for you during the Super Bowl And during all these events, so you can bet on every play. Every play. Our prediction markets. How the hell can you predict every play in these games and fumbles? So the people in Robinhood, they're losing money in the market. They're going to these prediction markets, which are just run by bots. I mean, they have super feeds in. They see the plays happening. And, the fact that they're advertising for people to bet on individual single plays in a Super Bowl, that's a business model?
Well, they've been doing that for a long time. This is not something new right now. This has been going on.
They're advertising like crazy.
10 years. Oh, I know. Everybody gambles. Everybody wants to bet on everything, like every single thing. Think about AB when AB was on here. He had a parlay going on this and that every single other night on baseball, this, that. It's fun. It makes it fun to watch.
Fun when you're making money, but when the market's going straight up. But all right, we get along with
well, no, it's an important conversation. DKNG and Penn, which will probably be weekend trades for me. At least DKNG because they do well coming into the Super Bowl. So I'm going to put that on my Friday night list, or maybe even Thursday night list because they might front run it a bit. The markets. I think it's really beat up. I think there's some opportunities there, but I mean DraftKings has been crushed too. Penn has been crushed too. Now Penn is doing more physical casinos. They moved away. They obviously have their sports betting businesses as well, but DraftKings is more of a pure play here. But they've been crushed. They've been crushed too. So I mean, there's just a lot of things that have been crushed. There are some opportunities out here. Some of this stuff we're going to look back at and say, why didn't I buy that? And then other things we're going to say, why did I buy that? That's just the markets. Couple more earnings here. Obviously, we got our guest coming up here in a couple of minutes here. We want to talk Eli Lilly because we had Novo versus Eli Lilly, and Lilly is now clearly back, and Novo is clearly in trouble here. Lilly reports earnings last night. Brentster has it on the screen. You can read us the numbers here, Brent.
754 in earnings versus 667 estimate. Nice bottom line there. Sales also really strong, 19.3 billion versus just under 18 billion. The guidance, in contrast to Novo Nordisk, NBO, as you were saying there, hinting at Dennis, strong, really strong. Company expecting 2026 earnings $33.50 to $35. Analysts are below that range at $33.20 or so. Sales also looking really strong for the year, 80 billion to 83 billion versus an under 78 billion estimate. What do you guys think?
I think Novo set a low bar for it yesterday. I think the Novo guidance, which came out middle of the day and they crushed it in a bad way. They got crushed on it. Set the bar lower for Lilly. And now Lilly gets the relief pop. It's like, oh, crap, we're not as bad as Novo. Thank God. And here's Novo continuing to go down. It just shows the market that we're in because we've, given a lot of hate to the software names. But there's been other sectors that have been crushed here too. We've had rolling crashes, which was one of the names of the shows last week, where, one day we had the crash down in all the healthcare providers, UNH and Humana, and these are conservative companies, down over 20%. CVS, another one. And then, we had the rolling crashes in gold and silver. Now they're bouncing back here, but, that's nothing to do with, AI. I mean, so, get Novo, random headline, lower guidance. You can't lower guidance in this market. This market is really unforgiving. You lower guidance in a normal market, you fall 5 to 10%. This market, they cut you down 25, 30%. Just ask PFSI. They lower guidance and the stock falls 40% a day. So, I mean, this is, just a market that is very unforgiving right now. You cannot say bad things in this tape right now. So Lilly says good things. But what did I say already? We're kind of in the sell the rip market. It's not the buy the rip market. This has been the absolute wrong thing to do. Now, is Lilly exposed to AI? Who knows long term? Jensen Huang, scary conversation last night. He's on CNBC on Mad Money, and they're talking about AI doing, like literally getting into drugs and starting to look like, can they, do their own trials and figure that stuff out. He said that last night. I don't think anybody caught that. I was like, oh God. I'm like, I didn't even think about drugs being exposed because they're spending billions of dollars on trials. But if AI can figure it out a little bit better than the human lab rat, I mean, then all of a sudden that's a whole nother can of worms for a lot of these companies here. I don't know I don't think the market's thinking about going there yet, but he said it last night. So, I mean, I like just disrupt the whole world. That's really what he said last night. He was talking about disrupting, trials and going in and AI figuring out how to do this stuff better than, humans. I'm like, whew. I don't really want to think about that right now. So all I know is we're in the sell the rip market. I'm not buying a stock up 85 points.
Boy, this thing traded under 1,000 yesterday when it went to 993 and change, and now you're right back up here. You poked your head over 1,100 in the pre-market, just barely over 1,100. You have a couple other intermediate 1095.48, and then 1104. I mean, that's just a big level. I mean, and I just say, just with the volatility that it's in, getting this 100-point move. Well, now it's an 82-point move. Be careful. I mean, if this one doesn't make an early challenge of the pre-market high, I'd love to see a big buying balance in this one for you, Dennis. I don't know if you're going to get it, but there's just a ton of resistance up here. If you're buying it off the hop, you make sure it gets to 1,100 and 1,100 in a heartbeat.
Selling the rip's been working. Buying the rip hasn't been working.
Yeah.
Meta, awesome earnings, eventually gives it back. So that's just where we are. Still waiting on our guests, so let's continue this conversation here. You want to talk a little bit of a short squeeze happening in ENPH. A couple of chatters in our chat, obviously, as well. Wanted to talk solar stocks, and solar has been kind of coming back here the last little bit. First Solar, obviously, I always think is best of breed. Had a nice candle yesterday, coming back up last 3 days, pretty nice. ENPH. That's always been a higher short interest name. It reported last night. Brent, how did they do?
They did solid. It was a good report. Nothing, I'm not going to downplay the report. The report was strong. Earnings 71 cents versus a 58-cent estimate. Sales 343 million versus about 340 million estimate. Their guidance was solid, expecting Q1 sales in the range 270 to 300 million. Analysts down around 262 million. Stock started moving, but then as it kind of got over, let's say 39 and into $40, it really started ramping, and there wasn't any spike. It was just kind of a sharp drift higher. And I'm looking at this price action and I'm going, all right, this was a solid report, but this much? And then I went to the high short interest website that we like to use. I did not see it on there, but it has been on that list for a very long time. I believe short interest end phase is over 20%.
One of the eternal stocks on that.
Yeah, 20-25% or so. And so I don't know if you kind of zoom into that chart and look at it, maybe on a 1 minute, you don't have to change it, Joel. But I mean, if you ever wanted to look at a visual representation of a squeeze, I think you had this in end phase, between 4:30 and 5 p.m. last night.
I mean, end phase is a play on lower interest rates as well. So if you think interest rates are going down in the second half, a stock like this will benefit. It's also a play. I mean, end phase, SEDG, its brother-in-law here, First Solar, best of breed, which I own in my long-term account. I mean, we've given so much love to the nuclear names. We've given so much love that AI needs energy. The number one energy source that is eternal out there is the sun. So I still think owning solar for the next 5 to 10 years probably makes a hell of a lot of sense. So anything to do with solar, I think makes sense here. So end phase, I'm not saying buy it up 24% here today. I don't buy rips, but do you put it on your shopping list if it pulls back? Maybe. I own First Solar already, though. I'd rather own best of breed. That's why I stick with First Solar.
It's just the stock has just had such a fall from grace here. Looking at going back to the monthlies. I mean, this was a $340 stock. Did it get the single digit? No, 25.78. Thing's wide open here. Just to see what it looks like. It's bid near the pre-market high, 46.77. I mean, do you want to go Kenny Glick here and say 45 get you 50?
Maybe.
I don't know.
I don't know in this market, though.
I don't know in this.
I'm not sure in this market.
The difference of this one is that it's just been so depressed. But hey, it's 8:39. We got our guest from Wedbush Securities going to help us out with the long-term aspect here. Long-term look at the market. Paul Dietrich coming on. Paul Dietrich, Wedbush Securities Chief Investment Analyst. Did you add a few more books since the last time you were on?
I've got over 12,000 books in my library, and I'm adding to them every week.
Man, the Breadster, I know Breadster is on his way over there. So pull out the book, okay, that talks about long-term investing in a late cycle bull market. We're all about cycles. We're all about trends, valuations, probabilities. Pull that book off the shelf. What do you have for us?
Well, one of the things we all do at this time of year, after the first of the year, is we kind of look back at what worked in 2025 and then try to extrapolate out and look at where the trends are moving in 2026 for investors. And I don't think people actually fully appreciate how much the global economy has changed over the last, 8-9 months. And it's one of the things that I see is that we're going to have to come up with some new tools for investors to figure out what's actually going on. We've basically had a global economy, integrated global economy since World War II. We've created over decades supply chains, global supply chains, and now that's all being changed. And some people think for the better, some people think for the worse. But the thing is that as an analyst, I just have to be a realist and say, look, this change is real, it's happening, and people are going to have to come up with ways to cope or with new ways to look at investments. And so I see this as the major thing that investors are really having to grapple with. And we see them now going into investments that nobody really, I've always had gold in my portfolios because I've always liked it as an insurance product for when things go wrong and I don't want my clients to lose any money. But really, you're now seeing gold and other commodities going up. And part of that is it's just a reaction to what's happening in the changes in the global economy, where people are hunkering down into a fetal position and trying to protect themselves going forward. And so, that's one tool, but we're going to have to come up with a whole bunch of other tools as the economies change. I mean, we're going from global supply chains to now regional supply chains and even country-specific supply chains. And there are companies that are benefiting from that, companies that are hurt by that. And we're also seeing in the tariffs that certain companies are benefiting, like steel, which has a 50% tariff, where everything else seems to have like a 15 to 20% tariff on it. And that's the government stepping in and saying, we really want to protect this particular industry and make sure that it does well. And we haven't seen that kind of state intervention really during any of our lifetimes.
Ever. Yeah, correct.
Here in the United States.
But in the backdrop of everything, I mean, people are still spending, right? People are still spending. I mean, yeah. I mean, the economy, it's diverging. It's not collapsing, correct? As you put it here, but there's disparity, between asset owners and wage earners.
Yeah, that's the thing, is that we have actually a long time ago seen a bifurcated economy like we're seeing now. But I always hate to mention this, it was in the roaring 20s, in the late 1920s and early 30s, where you had the kind of end of the Gilded Age of very, very rich people. The top 10, 20% of America was doing really well in the 20s and even into the Depression, but everybody else wasn't doing quite so well. And we haven't seen that kind of divergence in economic classes. And you have to be very careful. We are continuing to spend. Retail sales, really did well during the recent holiday sales. But it came literally 50% of all the spending in retail sales that we've seen over the last few quarters came from that top 20% of Americans who are, let's face it, they're mainly older, they're mainly baby boomers, they're often retired, they're people who have most of their wealth in their homes, which have done spectacularly well. They have their wealth in the stock market, which has done spectacularly well. They're not just the wage earners who are younger and starting families who now can't afford to buy a home. They don't have enough money. They've got children, and they're buying furniture for whatever apartment that they have, and they don't have stocks and bonds, and they don't have those real wealth creators, and that's the difference. 50% of all retail sales came from that 80% and of the lower end, and 50% came from the top 20%. That is not a healthy economy, and you have to, when you hear all the good news about the economy, you really got to dig deep into the weeds, the reports, and see where it's coming from.
So you're talking about like a kind of a fragile situation here, right?
Yes.
We're humming along, the consumer's still spending. What's the key risk signal that people should be paying attention to?
Well, as you mentioned, we're in what everyone realizes is what economists call a late stage business cycle. It's been 17 years since we really had our last real recession in 2008 and 2009. This is the longest bull market that America has ever experienced. And the reason it's the longest bull market that America has ever experienced is because partially it started with COVID, is that we have pumped trillions and trillions of dollars and balloon the deficit in America. And, whenever you can pump trillions of dollars into an economy, and it's going back to the people one way or another, or into companies, you're going to have boom times. But at some point, and that was part of the election last year, is that even though we're still spending about $2 trillion in deficit spending this year, and it's projected to be the same for the next 10 years going forward. That's all printed money. That's not wealth that's created from productivity and earnings. That's money that Congress is just spending like drunken sailors. And what they're doing is just it's having an effect on the economy. It's pushing things off. But if you look at this administration versus the Biden administration, the Biden administration was pumping that money kind of in subsidies almost directly to people. And now it's just kind of keeping the government going. It's going into national defense. It's going into border protection. All of these things, which depends on your point of view, good or bad. But the thing is that it's not having the same kind of ballooning effect on the economy, and that's why so many people are afraid that eventually it's like musical chairs. The music stops.
And what about for white collar jobs?
You saw the ADP reports this morning. That's private sector jobs. They were surprised by how much of a downturn that we're seeing. AI is helping, and that's the problem that these white collar jobs, which tend to be higher paying jobs, are going down almost faster than, the service sector jobs in restaurants and healthcare and things like that.
Are we not worried about inflation anymore? I mean, are we just going to sweep that under the table, or is that still a concern?
It's still a concern. It's just that it's been pushed off a bit. It takes once you're stimulating the economy with all of this deficit spending, you are pushing it off. And there are some, if you look at the reports and you just look at them, it looks like that we really, inflation is going up, but it's going up very, very slowly. If you look at the recent PPI producer price index numbers, which are always kind of leading the CPI, we're up to 3%. We're up about 3.2% in core, taking out food. But if you talk to the average person and you start looking at all the polls, the issue is affordability. And it's the things that gasoline prices are down, and that's great. People aren't spending as much filling up their cars. That's always something that you notice because you have to do it every week. But it's groceries, it's insurance, it's car insurance, it's home insurance, it's healthcare. I mean, these are the things that we pay for every day. And all the inflation that we had before, prices went up, they never go down. And so now they may be going up, bits and pieces, but grocery prices just zoomed up last year, and people are really upset. And again, this hits the lower 80% more than it hurts the upper 20%. And they're far more sensitive to it because the things that you can't not pay for, like utilities and energy costs, which are different than oil costs, those are the things that have just been climbing in double digits, and people notice it. And so we do have inflation. It's just kind of a selective inflation.
So asking for a friend who happens to be Brent, what's your favorite market-related book and what's your favorite fiction book?
There's a book that has just come out called 1929.
Okay, yep.
And it's a history of what happened in 1929 with the Smoot-Hawley tariffs and the Depression, the collapse. Again, this bifurcated economy where, the people who are the elites in America, the people who run Wall Street, the people who run the major corporations, the people who run government and the media, those people, they didn't notice what was going on with the rest of the United States. And this book is just so good. And
fiction book before we let you go.
Fiction book. I'm doing a number of fiction books, but they're all old.
Okay.
All older books. There's a book called Imperium that's been the guy who wrote the movie Conclave, the book on the movie Conclave, which was a big, won a lot of Academy Awards last year. He also wrote a book called Imperium, and it's a history of it's a novel, but of the history of the Roman Empire, and especially Cicero and Julius Caesar.
Okay.
You had Cicero, who was the small d Democrat, who believed in all the things that America was founded on, everything. And then you had Julius Caesar, who kind of won in the end, and who made it more of an autocracy. There are some lessons I think we can take away from that book. It's called Imperium. Get it. Read it.
Okay, Paul Dietrich, Wedbush Securities Chief Investment Analyst, giving a good outlook on the markets. Thank you, Paul. Talk to you again soon. More pain, Dennis. More pain, more pain, more pain.
Yeah, it's every morning we get something else. So Cloud X is coming from Wall Street Engine. Thank you, Wall Street Engine. Cloud X founded is looking at and this is aiming AI agents to automate mobile ad stack management. This is all above my pay grade, but this is right involved with AppLovin and Unity where they are. So you're getting disruption here again. So AppLovin, which has been getting hammered here the last couple of days. The carnage continues here this morning. It's down another 12% here. Unity, which has been absolutely crushed. It's got to be one of its worst weeks ever. Is down 40% in 4 days, is down another 5% here today as well. I have no idea, but I mean, the disruptions apparently just keep coming from everywhere.
I mean, last night in SCN, Dennis, we were kind of like, you know, we were leaning a direction, but we were kind of like, okay, let's, like you said, like, I want to wait tomorrow to see if they come for Uber and the DoorDashes. And I know that's a little different than the AppLovin or the Unity, but we're getting an early market showing its hand here that it's ready to keep going for these software names.
It just hates software. And I think, like I said, my further thinking is like with Uber, you know, they've got a lot of connections. They have a lot of people on accounts. It's not easy for AI to just come in and steal those businesses. It's not easy. Can it be done? Absolutely not easy to do. But, you know, AppLovin right in the eye of the storm here now. 3 days ago, when I tweeted that out, I was like, it's the only one holding up. And then bang, 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 it drops 150 points in 4 days. This has been one of the worst weeks for software probably in history. I mean, this IGV, like the last 5 days, has went 5 days ago, IGV, which obviously has a lot of companies in there, $98, $84. Now, again, you know, we've had crashes before in the overall market, but the market is still holding up, not even going down. This is just software. Like, it's just, we hate software. Market hates software. I don't know. Like, do you want to dive in and call a bottom when you get another headline that comes out and AppLovin falls another 13% on that headline? I mean, where are we?
Hands off.
Hands off.
What is IGV? I saw it in Joel's chart. It says like extended tech. What is that?
iShares
That's software.
Tech.
It's your pure like it's all your software companies
okay,
in there.
Gotcha.
So if you want to go in and look what's in the IGV,
in the name? Like in the
get rid of software in the name. Just
yeah,
eliminate software out of the name. You don't want to have software in your name here right now. Like so the holdings are Microsoft, Palantir, Oracle, Salesforce, Intuit. That's about the worst portfolio this week. Fit 6 is AppLovin, Adobe, Palo, Crowd, ServiceNow, Synopsys, Cadence Systems. Like, this is IGV is like where they're just setting the entire
ground zero.
They're ground zero. IGV is ground zero. They are literally hitting every stock in it. Like, if you can go through, it's hard to find a stock. Maybe if you go really, because it's got a lot of holdings and it's got like, you know, you're talking a couple hundred stocks in here. Maybe if you get way down on page 6, you could find some hope there. But even on page 6, it's a sauna. Not doing well either. What an awful place to be right now, software.
I think I have a segue into ratings and into away from a little bit of this software concern. Here we go. And that is Bank of America with an upgrade to buy, 5 below, ticker FIVE.
This is the kind of stock that the market wants right now. This is the kind of stock where it's like people are trading the trade down effect. I mean, and again, maybe go to Walmart here just to see the trade down effect. It's like Walmart is just blasting off every day now. They don't care it's 42 times earnings. What they care about is their business is safe. They're investing in safe businesses right now. They know people, if times get tough, more people shop at Walmart. If times get tough, you know, you can have the trade down. It's like, well, I'm not going to my fancy department stores anymore. I'm going to go down to Walmart because I can get stuff. I can get some clothes cheaper. I can get stuff cheaper. So, I mean, this is the trade down effects that are working. 5 below is a trade down stock as well. You go in there, $5 below. I don't know if it's still all $5 or under with inflation, but I mean, you go in there and you can spend some money and get some stuff. The dollar stores, same thing. You know, as much as they were hated with tariffs, they are loved right now. Dollar General. I wouldn't be surprised if Dollar Tree starts showing some life here too again. It's peeled back recently. Probably a buy is Dollar Tree because these are the stocks. I recently bought SVV, you know, a couple of months ago. Thank you to Carmen here. Savers Value Village. My play was if times get tough, and I think it's going to get tough, I think AI is going to make it great for a lot of people, and it's going to make it worse for a lot of people as well. If times get tough, you're going to go to the thrift stores. You're going to be trading down effects here. And I think Savers Value Village, the rally over the last couple of months, and the stock looks great. Like, look at this SVB chart. It looks like it's ready to break out. I haven't sold any. I don't intend to sell any anytime soon. It looks like it's ready to go up here again. So, I mean, the last couple of months, this has been a one running here too. But 5 below, going back to this, I think it's an upgrade. Not a bad time here. I mean, it's run a long ways. We were $60 back when tariffs were going to put these companies out of business. And I thought, tariffs were really going to be bad on them too. Ended up, obviously, the tariffs were not. And stocks have gotten a lot higher here. But this is, where the market is gravitating to right now.
This was actually a double upgrade too. They upgraded it from underperform to buy. A little color here thanks to Fly. Firm believes shares will return to a higher PE multiple as results continue to improve under the new leadership. Five Below's new initiatives in marketing should drive traffic, transactions, and mix shift to higher price points that could result in comps upside for years, according to this Bank of America analyst. Joel, anything?
All-time high. I got your number. Here. 205.22. That was flanked by a 204.50 high, 203.61. Your all-time closing high. So up $7 on 4,000 shares. So if you have your target in this area, I think take a look at it here. At least you're getting that action in the pre-market. Real quick, someone asked us, Sirhad asked us to look at GEV. Boy, oh boy, he's long from 340.
Say thank you. Forget
it. I don't know what to tell you. So perfect timing because it actually got a rating today too. Upgraded to outperform a Baird.
Oh man, I don't know.
Chasing.
Yeah, you could. I mean, let's go.
I don't know. This is a chase rating. This is a D-4 rating
here. Ooh, tough.
Holy mackerel! New all-time high by a wide margin here. Made a new all-time high yesterday. 791.95. So that's a gap fill on this one. Make sure it holds that.
I'd rather buy dips than rips. This is a rip.
I
would now want to wait for a dip to buy this, but not saying you can't buy it. But it's run a long ways, and the valuation is nosebleed too. So that's the concern with GEV.
Thank you, Sirhead, for the nice tip for us to cover that, folks. If you like giving a little tip, showing your support, we will cover the stocks that you're interested. A little rule of note. Also, want to say thanks to the Fly. We didn't get a chance to look into the Fly's platform here this morning when we were covering those ratings, but do want to say thanks to our sponsor for rating the ratings. The Fly, your source for over 1,000 breaking news articles daily, delivered in real time with custom filters and alerts. Discover their new The Fly Pro platform with AI-powered company analysis, unique KPI charts for deeper insights. Scan the QR code in the bottom right corner. You can head over to thefly.com. Thanks again to our wonderful sponsor for ratings, The Fly.
Okay, folks, a little bit of a rocky session here. Let's see if we can stay green amidst the carnage. That's it for today on Pre-Market Prep.